week 38 of the $100,000 stock challenge, and man, I got a super jam-packed video for you guys today. So do me a favor, make sure that like button and the subscribe button. With that being said, I'm gonna stop yapping and dive directly to it. But the yapping is going to continue because this is not financial advice. So please do your own research and fact check me on anything that I do say. But in this video, I'm going to be talking about simple steps that you need to do to start trading options, right? And that first step is 1, choose your brokerage account, right? Whether that's Webull, Robinhood, Moomoo, Fidelity, Charles Schwab, or whatever, right? Choose your brokerage platform, right? Secondly, after that, identify how you're going to chart, right? Either you're going to chart using the systems that Robinhood or Webull offers, or you're going to use Yahoo Finances, TradingView, whatever, right? That's the second thing. I know, me personally, I kind of switch back and forth between Robinhood and TradingView. Most of the time I usually just screenshot and mark up my own thing because I have an iPad, and that's how I do a lot of my charting as well. So those are the first 2 things, right? And once you identify what, platform you're going to use to chart on, right? There's a few different things that you want to look at, right? It's called indicators, right? I know a lot of people trade with like 7-10 different indicators, right? But you don't need all of that. You only need a simple 3 of them, right? And the 3 that I use is, the RSI, Relative Strength Index, which measures the momentum whether a stock is overbought or oversold, right? You want, if you're buying puts, you want a RSI less than 70, and if you're buying calls, you want an RSI greater than 30, right? So that's the number 1 indicator, right? The second one, right, you want to know the moving averages, right? You want to know the MA/EMA, right? Which measures, trend directions, right? And then the third one that I use is the MACD, which is the moving averages, right? It's, another one that measures the trend and momentum of stocks, right? So when you have these 3 indicators confirmed, right, before you even get a stock, right? Let's say I'm gonna use stock RGTI in this video as an example, right? RGTI, right? Before you even get to want to chart up and look for double tops or double bottoms or a 3 green soldiers or anything like that, right? Simply do a confirmation check with these 3 things, right? 1, check the RSI to see if it's under 30 or over 70, right? Depending if you're buying calls or puts, right? Boom. Check the MACD for crossover bullish patterns, right? Then third, check the EMA support if you're buying calls, right? So those are the 3 things you want to check, right? It is a 3 check simple rule, and those are the 3 things you want to check before you start marking up charts just doing willy-nilly, right? It's going to save you a lot of time, right? And then, which brings me to my third or fourth point, right? You don't need to know all the trading strategies, right? I'm gonna repeat that. You don't need to know all the trading strategies, right? You need to pick, 2 or 3 that you're gonna use, for up markets and down markets. Just pick your 2, 3 that you can identify, right? Whether there's double tops, double bottoms, 3 green soldiers, whatever, right? Pick you some patterns that you're gonna identify and use those, right? And I want to say, when it comes to trading options is identical to math, right? Doing math. You can't study math. You just can't read a math equation all day and think you're going to get it. You have to practice math. So with options, you have to practice it to get better, right? So you have to practice. You just can't, I'm reading this, I see it there, okay. No, you got to actually practice this options. You got to actively get in the motion, in the groove of doing it, right? So once you pull up your you identify your trading pattern, what you're going to use, you identified your stock, you double check with your 3 indicators, right? And you're ready to move on, right? So when you pull up a stock, you see these things, right? You see these things these Greek symbols, the delta, the theta, the gamma, the vega, and the Rio, right? And you're like, man, what are all this? What all this means, right? The delta simply means price sensitivity, the stock price, right? The data is the time decay, right? Time passing, right? That's what it affects. The gamma affects the delta spread and the stock price. The vega is the volatility sensitivity, right? Implied volatility. And the Rio, interest rate sensitivity, right? It's just simply the interest rates of the stock, right? But you don't care about any of that, right? You don't care about any of that. The only ones you care about is the delta, right? You only care about the delta, right? Why it matters? Because it directly shows how much a stock options is going to move when a stock moves, right? That's all it's going to show you is how much money you're going to make, right? And if you're trading short-term calls and puts, this is the one you want to focus on the most. If you're trading short-term, day trading, you really want to pay attention to the delta, right? Right. And if you're, swing trading or doing, extended call options or whatever, you want to more focus. You want to focus on the delta as well, because you don't really care about the theta. You don't really care about the time one, because you don't plan on holding these stocks until expiration date anyway, right? You don't care about that. You don't care about that at all, right? Right. So when you're looking for a delta, right, you want to look for a delta if you're swing trading of a delta that has, a 0.6 to 0.7, right? Because that gives you a higher chance of your stock finishing in the money, right? Give you a higher probability, right? And if you're day trading, right, you want to have a delta of 0.4 to 0.5, right? And for example, right, so if the stock moves up $1, is basically saying if you have a delta of a 0.6, you're going to make 60 cents for every dollar that stock moves up, right? I think that's the best way I can explain that. And the reason why you have certain deltas if you're swing trading versus day trading, right? Because if you have a delta between 0.4 and 0.5, you're gonna have a cheaper delta option, right? So you could buy more contracts at a cheaper price if your delta is cheaper, especially if you're day trading, right? And if you're swing trading or long-term call options, you want to have a 60 to 7, because it gives you a higher chance of that stock expiring in the money, right? So let me know if that making any sense for you guys right now. It's two different things, so you got to identify if you want to swing trade or day trade, right, when you're doing this. So I'm going to open up Robinhood and just kind of show you guys a quick example, right? Like I said, I'm using RGTI as this, right? Got RGTI pulled up. It's currently down for the day, sitting at $36.37, and it's down 9%, right? So I'm gonna open up here. I don't care about a lot of this stuff, right? You identify on the charts that since it's going down, I'm gonna take me some puts, right? This is just an example, right? So I'm gonna go to options trade. I'm gonna go to put, long put, right? Then this is the option chain that pulls up, right? As you can see, right, you see a 36.5 and you see a break even under 34.54, right? And to break even, it says negative 0.5.26, right? That doesn't matter. Don't let that trick you out your position at all. Don't let that deter you for buying options, right? The break even only matters if you're holding to expiration, right? So in this case, if I hold RGTI to October 24th, then I would need to be paying attention to this. But when you're trading, you never really want to hold stocks until expiration date, right? You never really want to do it. You want to get in and get out, even if you're doing extended call options or if you're doing day trading. You don't want to hold this thing for a week and let time decay, eat your profits up, right? So for this one, I'm going to go, just as example, I'm going to click the closest one to the money, right? When I say closest one to the money, This one is at, the price is currently sitting at 36.26, right? The closest to the money is, what this put would be 34.23, right? Okay, so look, I picked the closest one to the money, and if you tap on it, right, you can just you're not tapping on the 174, you're just gonna tap on the screen, right, and it's gonna pull up your Greeks, right? So at this time, I'm looking at my delta, right, and I'm looking at my theta, right? The only reason I'm looking at those two is, one, I'm deciding if in this case, this is going to be a day trade, right? So it is in the ratio of my delta, right? But if I'm going to, do extended put, which I don't do at all. I never did extended put. I don't like doing those. I only do extended call options. And I could do a separate video on why I like to do extended call options versus day trading, if you guys want me to as well. But the delta, right? The delta is at 0.4. This is in our range, right? This is something that we look for. It's not the best, but it's okay, right? It is not the best, but it's okay. So like I said, man, you don't care about the break-even price unless you're holding the expiration, right? So when you click on it, right, one share is going to cost you $173, right? And this is why I say it's really important to, before you start day trading, all that stuff like that, make sure you have a fund of at least, $1,500 minimum to start day trading, right? Because you could buy one share of this, right? But in order to really make a profit, you really want to start buying, 3 to 5 contracts, right? And as you can see, for 3 contracts, it's $534, right? And I know a lot of people, when you look at this, you say, oh man, RGTI is all the way at 36.28, and for me to go green and start making money, I gotta go all the way up here. That is not true, right? This is only a representation if you hold it till expiration. That's what you need to do. So once again, we're not holding stocks until expiration at all. When I say Coach Chris, he always talk about being a sniper. This is why you want to get in and get out, right? Our GTI has been dropping all day. If you'd have started trading the open, you would have seen that, and you'd already, let's say our GTI started dropping at market open, right? And you identified that on the charts, right? So you caught our GTI when it was, at 6% down at market open, because it was down $1.53. You're looking at your charts and you identifying that, okay, it's going down. I see my double top, or I see my double bottom, or I see whatever trading pattern you like to use in a downwards market. You see that, right? And then you see that it's going down, and then you could capitalize from when it went from $38 all the way to $36 on a day, right? That move, those $2 moves is money, right? Because you're buying 100 shares when you buy a contract. One contract equals 100 shares, so that's how you're going to produce a lot of money in that, right? But let me know if that makes any sense. I will be dropping a part 3 of this. Part 1, I was telling you just some stocks to keep on your radar for this week. This part, I kind of just did a very brief overview of how what to look for and give you some base knowledge of trading options. Part 3 of this is we're actually going to be marking up a chart and actively, getting busy looking for some options to take and actually buy. You're going to see me buy. I'm actually going to be trying to take a proactive approach and actively buy a option, right? So you guys can see it from start to finish, right? And yeah, but that's all I got. Oh, before I go, once again, I do have the Candlestick Bible PDF. Just DM me on Instagram at ShugTV if you guys want it, right? A lot of this information that I am saying is in that book. It is 100% free. I am not selling you guys anything. You don't have to go buy it. It's literally just a free PDF book that you can, get started on, right? The faster you get started, the faster you can start making money, the faster you can start getting better 1% each and every day. But with that being said, that's all I got for this video. See you guys next week. Peace.